In August 2013, we hosted the winner of our Win a Lunch with Rick Rule contest in Toronto, Canada. Prior to the lunch meeting, we had the opportunity to ask Mr. Rule about his thoughts on the current state of the economy, as well as the prospects for gold, silver, uranium, and what he thinks it will take to pull the junior market out of its current slump. First off, we asked him to tell our viewers a little about his fund and its area of focus.
I operate a series of private partnerships for Sprott USA. These are partnerships that are constituted for a 10-year term. They are focused on private investments, both debt and equity in the natural resource business, that have a longer outcome span than many people are willing to tolerate. It's my belief that money is made in exploration through answering unanswered questions, and most unanswered questions take 12 to 18 months, and it takes a series of 2 or 3 unanswered questions to get you the 10-fold or 15-fold returns that I hope, of course, to achieve for my clients. So these are funds that have 10-year restrictive periods, very unusual in the resource business.
What is your forecast on the state of the economy 12 to 18 months from now? Can you also zone in on what the rest of 2013 will look like for juniors?
Well, the first question, I guess, goes to the broad economy, the worldwide broad economy.
Yes.
I'm less optimistic than many people are. I see the world's mouth, that is the United States, enjoying liquidity as opposed to solvency. I don't see a lot of primary investment in the U.S. economy. I see decent consumer participation, but consumer debt levels are becoming scary again. I see a bit of a slowdown in China as a consequence probably of extraordinary credit conditions there. So I'm less attracted to the world economy than many of my competitors. I have to say, I'm a credit analyst. I'm not an economist, and so people should take what I have to say with a grain of salt. With regards to the second part of the question, to do with the junior mining shares, I have 30-something years of experience there. Probably my background as a credit analyst is useful there. And I need to say that we are certainly in bear market valuation territory. What we're missing in terms of calling a bottom in the juniors has been the 2 or 3 week long capitulation selling phase that greeted the 1992 bear market bottom and the year 2000 bear market bottom. I am committing capital in this market because sometimes things are cheap enough, but I don't think we've seen the bottom yet. There's no reason why past has to be prologue, but I have observed extended periods of capitulation selling marking all prior bottoms, which I've not seen this time.
Do you think that the price of gold or silver has hit bottom? Should people be investing now, or should they be waiting?
I'm not a market timer, and if you're segregating gold and silver from gold and silver stocks, or better yet, all 3 of the precious metals, including PGMs, I'm very constructive to adding PGMs to a portfolio. The whole narrative that was in place in 2009 and 2010 with regards to why precious metals is intact today. What's changed is that precious metals are 35 or 40% cheaper. If you believed in the narrative in 2009 and 2010, you must believe in it today. And if you believe in it today, the fact that the metals are 40% cheaper than they were can only be described as good. Bear markets are bargains. Your viewers need to understand that.
Is the decade-old bull run in gold finally over? What's your near-term outlook for gold?
I don't have a near-term outlook. I'm too old to do that. I buy gold as opposed to gold stocks because I'm cowardly. Gold for me is portfolio insurance of the most profound kind, in fact, catastrophe insurance. And while I'm not one of these people who root for catastrophes so that I can be right while everyone's wrong, I certainly sleep better at night owning gold. I'm a consistent and long-term buyer of gold, and as a consequence of that, I like lower prices more than I like higher prices. It lowers my cost of insurance. That makes me odd, probably, among your viewers.
Do you think at any point the Fed can cease their quantitative easing program without severe economic drawbacks?
I don't. In order for them to cease quantitative easing, they would need substantially higher tax receipts. The public pronouncement with regards to quantitative easing is that it's a way to add liquidity in the system, but the system is awash with liquidity. What it really is a way to fund the deficit by counterfeiting. It is estimated that the Fed is buying 50% of the new bond issuances it sells every quarter to fund the deficit. When you buy your own phony baloney paper, the truth is that quantitative easing is a code word for counterfeiting, and counterfeiting is not a good thing.
In your opinion, what type of catalysts will need to occur to bring the junior market out of its current slump?
Oh, that one's fairly simple. You need capitulation selling, And what follows capitulation selling is a sort of an 18-month standoff, low volume, between no buyers and no sellers. Over time, your viewers need to understand that bear markets such as this are the cause of bull markets. Things get too cheap, and when they rebound, the organic growth, if you will, the lack of sellers, gives the momentum that tricks back less sophisticated buyers. That's what happens. Bear market pricing causes bull markets. And bull market pricing, like 2009, 2010, the excesses cause bear market pricing.
What are things that you look at before making an investment in a company?
If you take the risk that's inherent in junior exploration or junior development, the rewards need to be large. The idea that somebody's going to build a small mine and generate cash flow from that small mine and grow in a bootstrap fashion, using that cash flow to grow the company, becoming BHP over time, is very seductive, very compelling, and almost always false. What I look for is a company that is involved in something that, if they are successful, can give me a 10-fold return or a 15-fold return or a 20-fold return. I love to do that sort of thing in bear market bottoms, where in order to entice me to invest, the company has to give me a private placement accompanied by a full warrant, which gives me double the upside with less downside. So what I look for is a potentially catalytic upside. And I also, and this is very important, I look for people who have experience in the company that is very, very, very appropriate to the task at hand. Somebody who has operated in that form of exploration before, in that part of the world before, and has enjoyed success doing just that before.
How do you determine the quality of a company's management?
Well, strong insider ownership. I want to see the management with a lot of money invested. And I don't want to see the management invested with a stock that cost them a tenth of a penny. I want to see them invested at prices similar to the prices that they're asking me to invest in. I want them to have been successful at essentially the same type of activity. We've said this many times, including a couple times for you. Someone who describes his or her success as having operated a gold mine in Archean terrain in French-speaking Quebec is not necessarily suited to exploring for copper in tertiary volcanics, young volcanics in Spanish-speaking Peru. They're both mining, perhaps, but the tasks are very, very, very dissimilar. I want tasks that are extremely similar, and I want the management team to know that they're going to get very rich, making me rich. If either of those ingredients are missing, so am I.
Can you comment on the state of uranium and when you think we might see a recovery?
I like the uranium market. I'm accepting of the fact that it could take 2 or 3 years. These things take a long time. It's interesting that now that I'm 60, 2 or 3 year time frames seem somewhat less relevant than they used to. It's odd that as your biological age advances that your patience increases. But certainly it seems to me that the uranium price has to go up over time because the industry doesn't earn its cost of capital. And it also seems to me that uranium offers a lot of utility to users. It generates a lot of power. It's an extremely dense fuel. If something has to happen and something can happen, it will happen. That's the way things work. When it will happen is something I don't know. But the fact that a lot of people are having apoplexy over the fact that the uranium price may stay low for 2 years or 3 years, even in the face of knowing that it has to go up, that's a situation that makes me laugh. I make money when I get to ask myself questions that begin with when, not if, and uranium is a when.
Can you tell us about your new product, Sprott's Thoughts?
I'm really excited about Sprott's Thoughts. What Sprott's Thoughts is a 3 times a week, soon to be 5 times a week, blog, for want of a better phrase, that comments on news relevant to natural resources and precious metals from the best thinkers within the Sprott group. Eric Sprott, of course, John Embry, Dr. Mark Faber, myself, but also 20 or so lesser known portfolio managers and analysts who represent the second and third generation of performance within the Sprott group. We're delighted to have this product. We've had absolutely spectacular feedback from clients and other people in the community. We're really, really, really excited about this. It's a way for us to communicate with the community that cares about natural resources and precious metals in a way that perhaps counteracts some of the discussion that you see taking place in the Wall Street Journal in Forbes and Fortune, on BNN, in media outlets that are probably less focused on and as a consequence less knowledgeable about natural resources and precious metals.
Are you buying now? And if so, in what sectors? Can you share a few of your favorite companies with our viewers and elaborate on why you like them?
I am buying, but I need to say my buying in the immediate past has been much more tempered. You know, we've had a bit of a rally in the precious metal shares as the gold and silver prices have increased, and I have used this rally to sell some mistakes I made and reorganize my portfolio. So I have to say, in the last 2 or 3 weeks, because prices have been higher and volumes have been higher, I've been much more a seller than buyer.
Thanks from everyone at Small Cap Power for taking the time for the interview, Rick. We really appreciate it.
Be the first to get exclusive research, expert interviews, and CEO videos by signing up to our daily newsletter. And for more expert advice, be sure to visit the experts page on SmallCapPower.com. SmallCapPower.com, investment ideas and research.